Hey, what's up? This is Andrew, and I will be bringing you the business breakdown for the week. We'll start off by going into some global trade figures to see what's going on around this pandemic and how it's affecting the world. So to start off, I'd like to say the World Trade Volume Index, normally, before the pandemic, it was at a level of 100. Well, in 3 months, it dropped to a level of 85. So that's a pretty significant drop in a very short period of time. But, it's moved on from there a little bit, and we'll take a look at that. But first, let's compare this to the 2008 financial crisis and what happened then. Because in that situation, we were at 100, same thing, and then we dropped down to 83. So a little bit lower than where we did this time. The difference was that one took 4 months, COVID-19 took 3 months. But now looking at the other side of it, coming out of that, and we can see now in 5 months, the COVID-19 situation has already jumped back up to 91 on this World Trade Volume Index. So right there, that's a pretty rapid recovery from where it was. And that had a lot to do with the lockdowns, the uncertainty about the virus and what was going to happen around it. And now we're jumping back into an economy where goods are being produced again. And now contrast that to 2008. So 2008, it took a while, but it got back up to 91. The difference was that took 13 months to get back up to 91. Whereas after this COVID-19 situation, it only took 5 months. So right there, it's a very interesting difference between the different crises. And we can see now some areas are hurt a lot more than others. China is actually one of the first areas to jump back after this crisis. And their growth in exports is around 9.5% in world trade volume growth. So they're already one of the few countries that's showing as positive for the year. They're going to have growth this year in their trade. Going on to the next item, let's talk about, this company, Nikola, that's a electronic vehicle company that's publicly traded. So last week we had some news about that and how it was potentially a fraud. You had Hindenburg Research came out and they were saying it was a fraud. The truck was going downhill and it wasn't powered by its own powertrain. So after that, you had Nikola basically come out and say, no, it's not true. We're not a fraud. But by the way, we never said the truck was operating under its own powertrain. So the truck was, coasting downhill and they filmed some video of it. And it was kind of a fraud because it misled the audience into thinking that the truck was actually moving on its own power. So all this came out. Then there was even more stuff. The SEC came in and said they were going to investigate Nikola now after this. And then on top of that, you had a bunch of the Me Too movement people kind of just making claims against the CEO of the company, Trevor Milton. I think one of them was his own cousin or something like that. So it got really crazy really quick with this company. And now Trevor Milton, who was the CEO and kind of the face of the company, announced his resignation. So, this just came out of nowhere. So he's actually going to retire. And since GM put in all this money just recently, put like $2 billion to get an 11% stake in the company. Actually, one of the board members that was an old GM General Motors rep by the name of Stefan Gursky is going to take control of the company and operate it from here. So that's pretty crazy that GM just went into this and then all these fraud accusations came out afterwards. So after this news, the stock was down more than like 34%. It just nosedived after this. And people are wondering what exactly is going to happen now and into the future. So this Milton gentleman I don't know if you can call him that anymore, but Milton, the old CEO, he is going to have to give up his position and duties as executive chairman of the board, as well as other board seats on the company's subsidiaries. So that was the agreement that they came to. But the difference, looking at this and how a lot of these CEOs can come out with these big paychecks in the end. So he does forfeit some stuff, right? He forfeits $166 million of equity, as well as a 2-year, $20 million consulting fee, right? Well, that's great and all, but he still maintains $3.1 billion in stock options that are tied to the company. So when you have $3.1 billion in stock, that kind of counteracts anything else. So although he's resigning and there's this giant fraud case and everything, he still seems to be getting out pretty well. So we'll have to see how this happens. We're going to see what happens with the SEC investigation and where that goes as well. But just a crazy ups and downs with this company lately. And the stock has just gotten pummeled after this because obviously this is something that nobody expected happening. On brighter news, we have Microsoft, which is making some acquisitions. So there were some big acquisitions in the past for video game companies, for developers, for studios, but Microsoft coming up with their new Microsoft Xbox Series X, which is the new console that's coming out, they're trying to do a bit of a different game plan here. And what they're doing is they're kind of gobbling up a bunch of the developers of great games that have historic titles that have had many iterations over the years. So Microsoft came out and they bought this company called ZiniMax Media for $7.5 billion. So that's a ton of cash right there. And that studio actually owns 13 different game development studios. So this is a big way for Microsoft to jump in and gain control of a lot of these major titles that are blockbuster titles. So you have Fallout with Bethesda, you have Elder Scrolls, you have Arcane Studios with Dishonored, there's Machine Gun Games with the Wolfenstein series. So there's a bunch of different ones that they just, in one fell swoop, they even got Doom Eternal, the new game came out. Now they have the Doom series, which has been around since the dawn of computer games. So this is one of the largest acquisitions. I was mentioning that before. One of the recent ones, I think a few years ago, there was a company that got bought out by a Chinese company called Tencent, and theirs was in the billions of dollars too. And it wasn't even for a standard AAA, console title. It was actually for Supercell, which makes games like Clash of Clans. So they make games like that, and it's for the mobile. And everybody knows that there's a huge mobile market. And that was pretty much the biggest game purchase. And then there was also a merger between Activision and Blizzard Entertainment. So you had a developer and a studio merging there, and that merger was actually $8 billion. So that was larger if you count that one. That was back in 2017. But yeah, this is big news. So now that Microsoft gains control of 23 studios, what does this mean for their bottom line? Or what are they trying to do here? Well, we think we know what they're trying to do. What they're trying to do is they're trying to set up this Xbox Game Pass and be the Netflix of video games, where people can go and they pay a subscription, certain amount per week, per month rather. You pay $10, $15 a month, and you can have access to all of these different titles. And then you don't have to pay the $60 per game. And then in the future, they also want to make it where you can play these games on your phone, on your computer, on your tablet, and just use their controller. And the software is streamed from Microsoft servers. Again, Microsoft has a big cloud computing business, so they can do that kind of thing. But, thinking about this in terms of Microsoft, their revenue, their profit, what does this actually do for the company? Well, they had sales of $143 billion in 2020. So that's a big number. The problem is that the video game division, well, that only makes about $1 billion worth of that. So that whole division is only about 1% of Microsoft's total sales. All their software and everything else they do, and peripherals and accessories and hardware, everything else is the larger part of that. And then you have the small video game portion. So it's not really enough to move the needle, so to speak, on the company itself. But still, this is big news for this type of industry. Next up, we have Roku, which announced a partnership with Comcast Peacock, which is an interesting name for a streaming service. But they have their streaming service now where they kind of want to be like, Apple TV is also trying to do this, where you have all of your Netflix, your Amazon Prime, your Hulu, your Peacock, all your streaming services, ESPN and everything, Disney Plus, and you have it accessible from one device. And that's what Roku is trying to do. Well, the announcement was great for Roku. I mean, the stock was up 15% on the news, and there's a lot of positive buzz about that. So they're looking to just keep solidifying that. And Roku's been a great company over 37% it's up this year. So they've been doing really well as people kind of cut the cord and go to these streaming services. Going into other investments, we have the 10-year Treasury yield. So this just hit 0.66%, 0.66%. So you're basically earning less than 1% on your money when the expectation for inflation for this year and for next year is 1% or more. So you buy a 10-year Treasury bond right now, and you're pretty much guaranteed to lose money. So that should be fun. I don't know why people would do that, but once again, the interest rates and just the amount of sovereign debt and the bubble in this area is getting really big to the point where it's defying gravity. people are guaranteed to lose money on it and they're putting money in anyway. So in what investor reality does that make sense? I don't know. Now the stock market has been selling off a lot for the tech companies, the big tech. I talked about that last week. You could check that out if you want to see some information about that. But looking at it a little bit closely to specific companies in the tech sector, we had Apple close higher, about 3% at the end of the week, but then they lost 20% since you look back to their all-time high, which was on September 2nd. That was 137.98 a share. So it sold off from then. At the end of the week here, it started coming back. But you see a 20% decline is basically, it went into a bear market from its all-time high. So that was with the tech sector sell-off. You also had Amazon down 14% during the month. So another huge company that got hit pretty hard here. Their all-time high was 3,552 on September 2nd. So they were selling off as well. So we had these huge ones. We also had Alphabet down 16% from their record high of 1,726. So it's interesting seeing these items come off of their all-time highs and sell off, and what level exactly they'll level off at. Alphabet, it was about 16% down. So some of these have gone down 16, 20%. That's kind of correction territory there, so maybe it's bottomed. So a lot of people are looking at that and they're trying to gauge where that bottom is in those stocks. Now looking at the coronavirus death rates, well, it's now over 200,000 individuals in the United States have died from COVID-19, and global cases are now around 32 million. That's a ton of people and a ton of deaths in the country. The overall death rate is still less than 1%, but just the numbers of people, 200,000 people is a whole city just gone from this. Next up, we have a new kind of startup business, and they're trying to do something a little different here. The company is called Diamond Standard Company. And what they're planning to do is basically make a commodity for the diamond market that hasn't existed previously. If you look at gold, you have certain gold bars. You have the 1 gram gold bar, you have the 500 kilogram gold bar, you have different kind of 1 ounce gold bar. You have standards that are in place for that commodity. Diamonds, on the other hand, there's different carats and grades, but it's not really set up as one commodity that can be priced and that's uniform throughout. So Diamond Company is planning to sell 50,000, what they call, it's a coin, and the coin has about 5 diamonds. Actually, correct that, it has 11 or 12 diamonds in each coin, and the coin itself is going to be worth around $5,000. That's the goal here. So the grade of the diamonds, the carats and everything, the cut, everything is going to be made to try and get it to that exact price point so that they're kind of uniform. It's kind of different than with gold though, because gold is just a metal, right? Diamonds, you have diamonds that are all different kinds of shapes, sizes, colors, purity. So it's going to be interesting how they do this and how the market reacts to it. So it's very, very cool to watch this kind of stuff. The sale of the coin is going to be initiated on September 28th through a $25 million offering. And the goal is to get that, set standard for the industry. And they're going to have an automated system that basically does all of the bidding, and they're getting 50 to 60,000 size sample of diamonds, and then they're going to put them in these coins, issue them out there. And an interesting thing with this, that is why this is very innovative, is that each coin carries a computer chip, and that makes it a digital asset using blockchain, which can be bought and sold online afterwards. So you're securing this asset with the blockchain. It's pretty crazy. And then when you're watching that buy and sell online and changing ownership, you can see how the price level would change with that. And I like the idea of this. This is really something that we're going to see more of in the future, is different companies utilizing the new technology of blockchain from Bitcoin into other areas and to contracts and to digital assets. This kind of reminds me of what was going on with a company, I believe it was Wax. Let me see if I have it here. Yes, Wax Blockchain. They had another thing going where they were making digital assets with blockchain, and they would keep track of collectible cards. So you could buy the cards online, and the digital asset, that whoever owns that is guaranteed by the blockchain. So when the blockchain shows you this person owns it, there's no, it's not like a bank where you have to show 10 forms of ID or the DMV. You have to show all these forms of ID. The blockchain guarantees that, and that's the beauty of it, is that you can guarantee ownership of a digital asset. Now, one of the few issues I have with this one, and maybe the other ones, is there's two things, right? One is that this coin that they're making of the diamonds is actually a physical item, but the asset's going to be digital. So, okay, they have the tracking device in there and stuff, but it still creates some way for people to do some kind of tricks or fraud or counterfeits where the digital asset is not matching what's in the physical world. And that's always going to be a problem when you have something that's online and offline like that. The other issue with this is that you have a kind of a digital asset. You need something that has like utility. It has a purpose. It has some kind of intrinsic value or intrinsic utility or something like that. And where they were trying to do this with collectible cards, I mean, there's nothing you can really do with the collectible card besides look at it on your screen. It's kind of like baseball cards. They don't have much value outside of just being like, this is cool, and how much would other people pay for it? So that's why you've seen some crazy things happen in the card industry, which is coming back a little bit now. But this online one where they're doing, digital assets, if it was a digital asset like software that could be used as a tool for something on your computer, or if there was a game that you could play and the digital asset was in the game and anybody could use it there, it's kind of a uniform standard, like let's say gold, right? Gold can be used in wiring. It can be used in a lot of sound devices and equipment. So it has a practical purpose, and that will always give it value. It's not just how much will the next person pay for that gold. It's also that it has intrinsic value. So I wonder if they're going to be able to make a digital asset that can do that, and I think that would really take off. All right, enough with that one now. So let's move on to another big merger announcement that we heard of. So there was actually a company called Grail Inc., which is, holy grail, I guess, of companies. And what they were doing is they were making a special blood test that could detect cancer early in patients. And there was rumors that this company was going to go and they were going to become publicly traded, and it was this new hot company, right? Well, before that kind of could come to fruition, Illumina just paid $7.1 billion to acquire the company. So again, we're seeing another $7 billion total here for a buyout of another company. So Illumina already has a business now where they kind of do like genes and sequencing and checking all that information out. And then you can see like if you're susceptible to cancer or what kind of situation you are with inherited diseases, genetic diseases, and things like that. So this kind of fits in with their whole, a lot of companies now are really trying to hit the cancer research and the new drugs in that area. So it's going to help them with that. Next up, we have another video game company. This one, it's not publicly traded yet, but it's raised $100 million in Series A funding. And the company is called Placo Global Inc. So what they're doing is they're trying to basically set up a social media game. And this is something that, some other companies have tried to do this online and stuff, but now they're trying to do it where if you just send somebody a text message or a hyperlink, they can click it and join the game. You don't have to go and go to your store and buy a game and download it. You don't have to get a digital version of the game to download and play. You don't have to just do all this setup. You click that hyperlink and you can hop right into the game. So once you're in the game, you can play with your friends, and it's a very social experience. So a lot of big guys are kind of investing in this one. I mean, a lot of companies are going into it, and it's got a crazy valuation already. So the problem with all this is, of course, they have yet to actually release a game. So they've already has a market valuation of $1 billion, but they haven't released anything yet. There's no profits yet. They're just it's an idea right now. So we have to see how that plays out in the long run, but they're definitely in a market where there's a lot of interest. Going next to Johnson & Johnson, one of those kind of classic blue chip companies that you hear of. So they started phase 3 trials of their COVID-19 vaccine. And the thing with this one is that it's only one dose, and that's huge because a lot of these things are 2 doses or more, I believe. And that requires a lot of logistics on it. It requires people coming back to get injected again for the vaccine. And it's a lot more difficult than if you could just have one shot and you're done and you don't have COVID-19 worries anymore. I mean, that would be pretty amazing. So they have 60,000 participants that are going to be partaking in this trial. And It's big also because it doesn't have to be refrigerated at real cold temperatures when it's traveling. So they're also shipping this overseas to other locations, and they're going to see how it does there as well. So that's big nose on that account. So we're talking about travel and things moving around. Well, there's about 30 airlines in the entire world. And naturally, airlines are not doing so hot right now. And for the second quarter right now, only 4 airlines are actually able to generate a profit. That means all of those other ones are just 26 airlines are just in the red. They're losing money. And a lot of them, like the American ones, are actually asking the government for assistance or some type of support to be able to kind of get out of their situation or survive until the pandemic is over and people are traveling again. And now if you look at the airlines that are doing very well, the ones that were able to survive here and actually make a profit, you have China Airlines, Korean Air, Asiana Airlines, and EWA Airways. Do you notice anything, a trend in those? They're all Asian airlines. The EWA Airlines is for Taiwan, if you didn't know that one. They have a lot of systems that they set up in place where they move from travel-oriented business to cargo transport. So now that they're transporting all the cargo, they're actually getting a lot of that business. That's how they were able to maintain profitable. Meanwhile, you have Delta and American Airlines. Delta the worst, American Airlines is second worst for how much money they're losing right now. Delta lost $4.82 a share, and American Airlines lost $2.50 a share. So a lot of trouble for those. Oh man, and we had some more big news with the electric vehicle companies. Earlier we had Nikola. Now we had Tesla with their infamous battery day. So everybody was talking about this 1,000,000-mile battery. It's coming soon. But turns out there was no 1,000,000-mile battery, or that's, I guess, a battery that lasts for 1,000,000 charges. Or anyway, what actually happened was they did this announcement. They came out with a few updates here. So they had the Model S Plaid Edition. This one starts at $139,000. Now the normal one was probably like $100,000 when you get a few options and stuff like that. This new one is basically crazier, faster, wilder, and it has a 520-mile range, 1,100 horsepower, top speed of 200 miles an hour, and it could go from 0 to 60 in less than 2 seconds. Less than 2 seconds. I wonder if that gives you like whiplash, you know? But I guess that's pretty cool if you have a lot of money. $140,000 to go get that one. Their next update, they're making a lot of changes to the batteries. They're changing the form factor. They're changing how they go into the cars to fill in more of the space and basically utilize their space more effectively. They're getting rid of the tips on the batteries and the way it connects. Now they're going to be 6 times more powerful, and well, there's a lot. There's 14% reduction in kilowatt hour to actually produce the items. And then they're building out a lot of factories here, and some of them are planned, and some of these new changes are just being implemented. They're going to take between 1 and 3 years to actually happen, which is a big thing here because everybody wants, what's going to happen tomorrow. I can't look far off into the future. What's going to happen tomorrow? But these things are 1 to 3 years out. And eventually, the reduction from vertical integration with the battery, they're going to get rid of cobalt. They're going to start putting nickel in all the batteries. They're changing the design. They're changing what's in the battery. And they're increasing their production capacity, getting rid of kind of the Panasonic deal that they had before. And it ends with a 56% reduction in kilowatt hour per battery. So that's pretty huge. That would make EV cars actually able to be afforded by the masses. So originally, we heard before we had the $35,000 car, which is actually around $40,000. Well, now Elon Musk came out, the CEO of the company, and he promised a $25,000 vehicle that is going to be introduced with these kind of new plans that they have here. And he said, it may take a couple of years to get that out there, but the problem was he also promised this back in 2018. There was a promise for a $25,000 kind of everyday kind of vehicle that anybody could afford in America. Well, that hasn't come into fruition yet. Usually with the Tesla timelines, you're looking at double at least for the timeline. So if they said that's going to take 3 years, they said it in 2018, I don't know, maybe another 3 years, maybe another 5 years out, they can eventually get to that. So they also reinforce their kind of strength in the marketplace right now. They're selling a lot of cars. They're close to that 500,000 per year number that they're selling. And there was 30 to 40% growth in 2020, even with this whole pandemic situation. So they still sold a lot of cars. They still made a lot of growth and money off of that. But they also made a lot of money selling other things, right? So they said that this is going to be the first year that they're on track to make a profit for the first time ever. They've had 4 quarters of profit. They've never had a full year, calendar year, where they have a profit at the end of the year. And this looks like it will be it. Hopefully they can make some money by selling cars this time though, instead of just emission credits, because if you're a car company, you should probably be selling the cars and not just credits. But we'll see how that continues. Next up, we have Nike. So Nike had a great quarter here. They traded at an all-time high after beating their earnings estimates. So the revenue was down 1%, right? But who cares about revenue? We care about earnings. That's the real driver of stocks, right? And of companies. So their earnings were up 10% from the same time last year to 95 cents a share, or $1.52 billion. So that was a ton of money. And people were kind of surprised by this because they didn't see it coming. They thought the pandemic and everything was going down. They're not going to do so well. Well, it turns out there was a jump into online sales. Originally, Nike thought that 1/3 of their sales, 1/3 would be digital sales by 2023. Okay, they give a few years off. Well, digital sales in this current, I think, the quarter, just to make sure, 83% jump in the current quarter for their online sales. And now they're already at 1/3 of their total revenue. So, I mean, they just jumped the gun there 3 years because of this pandemic and the transition to online sales. So their regular revenue is around $900 million, and 1/3 of that now is digital, is online. They raised their guidance for the year to possibly low double-digit growth instead of the previously expected 6%. That's another huge move. Everybody loves good guidance. The stock was up, 9% on the news and is now up 105% in 6 months. That's an amazing return right there. General Mills, the maker of all these types of cereals and items that you have in your cupboard, you have Kellogg's and you have Cheerios and Lucky, the Cinnamon Toast Crunch. What is the one with the leprechaun? Lucky Charms. So you have Lucky Charms and you have all those selling like crazy right now because of the pandemic. The CEO came out and he said, people are eating cereals for dinner now, which I don't know if that's a trend, but they had an increase of 28.2% in sales from the year before. They beat earning estimates at 0.87 a share, revenue of $4 billion, and something that's unheard of during the pandemic, they raised their dividend. So they raised it 4% to 0.51 a share. So this is one of the few companies that's actually in a strong enough financial position that they can raise their dividend during all the craziness going on. Another company that had their IPO, we talked about before, some ones that were thinking of IPOing. Well, Corsair Gaming had their IPO. They make like headsets and mice for gaming computers, for computer gaming, and the headsets can be used for a lot of different purposes. But basically, they priced their IPO at 14 million with 14 million shares at $17 a share. Okay. Then it came out and didn't look so good when it first came out. They were down 16.18% to $14.25 on the first day. They were really struggling with this. So you think, okay, this is one of those IPOs that's terrible. We had the Snowflake IPO that I talked about in last week's video. So if you want to check that one out, go check that one out. That was a very historic one. People were thinking maybe this won't be a huge IPO again. Didn't happen on the first day. But by the end of the week, now keep in mind during the week we had a lot of sell-offs going on. During the end of the week, it came right back up, and now it's at $17.25 a share, which is above what the IPO price was. So it's a pretty crazy swing, down 16% and then back up again. So we saw that occur for this IPO in particular, trading under the symbol CRSR. Next up, we have the dollar index, which has been gaining some momentum lately. It's at 94.35, and stocks and gold have been trending down. The dollar index has actually been trending up. On a side note to this, we talked last week about gold and about Turkey and how there was a lot of gold demand there because the currency was basically collapsing. It was free falling, so people were getting out of the currency and going into gold. Well, now we have Turkey announcing a surprise interest rate hike, and they're basically changing their 1-week repo rate from 8.25% to 10.25%. And that was kind of out of nowhere. Nobody saw that coming. It was very unexpected, and they did that to kind of strengthen their currency as it was having a lot of trouble. Moving on. Amazon. So we talked about video games. We talked about these companies making big moves in the video game sector. Well, now Amazon, the powerhouse of them all, of everything, the powerhouse of owning your life, Amazon, they have a Luna streaming service that they announced. And they're basically doing the same concept that Microsoft is trying to get into with their Ultimate Game Pass and eventually be able to play on your phones. And the same thing with Stadia from Google, which is also trying to do this where you have it streamed from their servers, all the information's on their equipment. You don't need the hardware, you just need a device that you can go and play your games on, basically a screen, and you can use a controller. They're gonna have its own controller for this. And you can see now it's up on the website if you wanna check it out. So this is another huge investment by Amazon. And the crazy thing with this is that they're trying to do 1080p running at 60 frames per second with 4K resolution. That's in the future, but that's where they want to get to. And if there's a company that can do it, it's Microsoft or Google or Amazon, which are the ones that are the cloud hosting companies. Amazon is like taking over Amazon Web Services has taken over the cloud computing market. And now they're going to have games like Resident Evil 7, Sonic Mania, Control, Assassin's Creed Valhalla, Far Cry 6, all these big titles going to be on their platform as well. And their competitive advantage here is that they have Twitch integration. They purchased the company Twitch, which people stream playing video games on and other items as well. But you have video games being implemented right in there, and it looks like they're going into some other businesses in the video gaming sector. Let's go to how the retail sector is doing. Well, not so great if you can see by all the closed stores and everything that's going on with that. So Ralph Lauren, they just announced a 15% cut of their workforce. Now, technically, they're an apparel company, right? Apparel company, but they have a lot of retail outlets. And that's a problem when they all have to be closed or at limited capacity. So 15% of the workforce is a significant amount. They're going to focus more online, as is everybody right now. So going into that, I mean, we can see people being laid off continually here. Every week there's new announcements about layoffs. There's a lot of good news coming out there as well, but you can see some sectors of the economy are just really hurting. So looking at the unemployment rate, last week we had the numbers come out. 877,000 people filed for unemployment last week. That was with the 866,000 the week before. And this time, there was only 840,000 expected and 877 was the actual. So again, we're beating the expectation on the bad side. It's worse than what they originally thought it would be. So we had 2 weeks worth of over 6 million people filing a week for unemployment. That was back in April, right? 6 million people. That's crazy. 2 weeks of 6 million people each filing for unemployment. Now the number is under 1 million, which is good, but that's good in the new sense, in this pandemic sense. Now we have between 850 to 900,000 for the past 4 weeks. It kind of leveled off. So we were at 6 million in 1 week. And you look at a graph of it and it goes down like this. And now we're kind of hovering around 850 to 900,000 and it's leveling off. The bad thing with that is that a normal amount for unemployment claims would be around 200,000 in a normal economy. And we're at 860. So 877 last week. So we still want to see more improvement on that and start seeing more of a downward trend to be really good. Okay, we've seen Iran trying to sell oil to places such as North Korea and Venezuela to get around sanctions and earn some money, right? There's all these kind of like sanctions that are put on them for their nuclear policy and what they're trying to do. And America's put a lot of sanctions in a lot of other countries. They're kind of limited in where they can get additional capital, where they can make their money, who they can sell to. So they've been sneaking around kind of trying to get money where they could to these countries that nobody else pretty much wants to deal with. And now we are seeing a different approach. There are 3 power plants, natural gas power plants in Iran that because of a law passed in July, I believe it was July, they can now go and use their electrical capacity to go and mine Bitcoin. That's a different one. So on a large level here, the power plants are going to go and invest all this money in building the rigs to do the computations required to mine Bitcoin and earn some money on that. So you see here that no matter what you do to try and put sanctions on a country, there's always going to be some way where they can just still make money somehow. There's always going to be a way for them to get the money. And that's what we're seeing here, is they're going to some strange avenues here to make some additional capital. Going to California now. California announced that they are going to cut all sales of new gas-powered vehicles by 2035. Wow. So you can't buy a gas-powered car in the future in California? I mean, that's crazy. A few years ago, the only company that said that Tesla was Tesla. Tesla was saying that the vehicles of the future would all be electronic vehicles and it would be zero emissions and it'd be great. Everybody else thought that that was crazy. It would never happen. Well, it's starting to happen. You see Ford now has actually made a Mustang that is electric. They're making hybrids as well. So you have the mainstream car companies going into this market. You have these new car companies going into it. And we're seeing now that there is actually a trend towards going to these electric vehicles. And I see a couple problems with this. I mean, if you look at it from the simple standpoint of how much it's going to cost, well, the average cost of an electric vehicle right now is $55,600. That's a lot of money. If you look at the average cost just going by Kelley Blue Book, if you go by that, the average cost for a gasoline 4-door sedan is $35,000. That's a big difference there. So I don't know where you're going to get the extra $20,000, especially with all the taxes and everything else you have in California. So that's going to be tough. And I know California likes to be ahead of the game, a step ahead of everybody with the emission standards and the environmental impacts of their industries. But this is like a very dramatic change to just say that they're going to outright ban all of these vehicle sales. I wonder if people would be going to nearby states to purchase gasoline-powered cars and then driving them back to California. I mean, that could be an option that people can do when they make laws like this that kind of just ban whatever they don't like. So that's an interesting thing there. Next up, we're going to how did the actual market perform this week, right? So we had the S&P 500 rout that took place. It took the market down 10%. So it went 10%. The record was on September 2nd, and it dropped 10% from there. And that's about $2 trillion in valuation that was lost in that time period. So now we had Thursday and Friday, the markets rallied a little bit, not so much, but a little bit. And a lot of this talk is around, well, they're going to make a new stimulus deal. We're all going to be able to get, money handed to us and we can go spend it. And that's supposed to somehow save the economy. So the market went up a little bit on that. But I like seeing the market going up based on these, big mergers and acquisitions and earnings coming out that are a lot better than expected. I don't like when it's, basically when there's a government policy that's coming out that might help people and it might not. That's a lot of guesswork involved in that, and who knows what's going to happen with that. Earnings are solid. They have to be reported a certain way in GAAP standards so that it's basically official if you're a publicly traded company. So I like to see the market driven up by earnings beats, not by news such as this. But this is what we have for now. And it kind of helped end the tech market sell-off that we had going through the earlier part of the week. So that does it for this week in Business Breakdown. Tune in next week and you can check out all the other great events that happen around the world. Thanks for watching.